We talked about the balance sheet, we talked about profit and loss statement, and now we have to ask ourselves, what is the content of the annual report? And here you see the contents now of the annual report. We have the CEO letter. We have our business activity description, the out view. We look into the future. And our management decision and analysis. Our audit report and a description of accounting procedures. In German, the expression is Erläuterungsbericht. Here you see what has happened in the past. Where are changes in our depreciations? How are the changes in capital, etc., etc. Okay. Actually, the main part is now the main question now, according to German law, and also according to IFRS, International Financial Reporting Standards, according to IFRS, the reporting should give a true and fair view. The true and fair view. True and fair view. The company should indicate the situation, how it is really, what is the situation of the company. What is, as we said before, what is the property of the company, the asset side, and from what side, how is it financed, the actual situation. We should give the actual situation without any reserves. We should give the actual situation of the profit and loss statement. The question is, if we look to the people who we address our reporting, here's our true and fair view, and our going concern principle. And if we consider now to whom the report is addressed to, you see here investors, the board, creditors, company members, and general public. We have to consider that all these members of the group have different aims. The investor is interested to have a good cash inflow for himself. He wants money. He wants to see money. The board is considering more the going concern of the company. The creditors are interested that the company keeps a lot of money, is not giving a lot of money out of the company. They're interested that the company keeps the money. And the general public is also interested to have a going concern. But again, the creditors are interested, if the company gets bankrupt, to have a lot of money, to have reserves. And that is the big question. The big question of the past, if you look to big companies like Enron or other big car companies like General Motors, if they would have had a lot of reserves, they wouldn't have to go bankrupt. Again, the question what is coming up, should accounting show the reality, or should the company have the chance to build up reserves? Reserves who secure in the future a continuation of the company, a going concern. But a going concern is not achieved by representing the situation of the company as it really is. It's not. If we come to the stripping of assets, it might be that the company gets bankrupt. If we have reserves, it's just like with you privately. If you have reserves, you're able to continue in the future. If you do not have any reserves, you have to strip your assets, you have to sell your assets, and the going concern of the company will have problems. Do you have any questions concerning this? Yes? The principle of asset stripping is that we value our assets according to a necessary sale. We do not consider the future, a going concern into the future. We consider a valuation to sell it immediately and single. If you consider, if we have here 20 lamps together have a high value. If you have to sell one lamp immediately, you only get a low value. Okay?
Yeah, but
the going concern value considers a global value, the value of going forward, of continuing the company. If you sell it single, you come to a lower value because there is no value of combination of the lamps or of machines. If you consider the value of machines, if you have more machines who are working together, they have a high value. If you take a single machine, it has a low value.
Erklären doch.
Also einfach
This is the assumption of getting bankrupt. If you value an asset by going bankrupt and not to continue. Okay?
Ich verstehe den Satz.
Okay, gut. Das meine ich.